Hello again, everyone, and welcome to our Market Guard monthly update. This one recapping January. So we started off the month with a bit of a bang, quite a bit of volatility there, especially with the announcement of DeepSeek, which we'll talk about here in just 1 second. So let's do a recap on the month as well as a forecast of what we see coming for the next month in February as well as into the new year. 4 main things we want to point out as we take a look at the markets and a glimpse for the month of January. Number 1. So Wall Street ended in positive territory, but it definitely experienced some turbulence in that last week of trading. Now, this was obviously rattled by the emergence of DeepSeek, which we just talked about, and the idea of the U.S. tariffs that were coming in on the last day of trading as well. So a couple things that sort of upset the market there at the very end. Talking about DeepSeek, so in this situation here, we had that breakthrough of China's DeepSeek and its ramifications of US-based AI-related stocks. This led to increased volatility in the technology sector, and it resulted really in the technology and growth stocks that lagged the overall benchmark. As you can see on this chart, this represents the S&P 500 index, the NASDAQ, and the Dow Jones, and this is for the month of January. The Dow Jones finishing at about 3.85% positive, the S&P 2.7 and the NASDAQ at 1.64. As far as significance of drawdown, again, this is that technology and growth stock sector here, where naturally the NASDAQ is going to comprise of more of those individual type positions that make up more of the index. So when we see a drawdown of that nature, go back and look at NVIDIA, an 18% single day drawdown. That's obviously going to be a pretty heavy weighting inside the NASDAQ. Also a significant weighting inside the S&P 500, which is again why the two of those indexes were underneath more pressure, especially towards the end of the month, as opposed to something like the Dow Jones. The third piece, again, that weighed on the month of January was the looming threat of the tariffs and unexpected resilience from the U.S. economy, primarily in the jobs market. Now, what this has led to is the Fed's keeping interest rates unchanged, and they're going to stop easing monetary conditions. Now, one big winner for the month, and really since the election, has been the cryptocurrencies. So cryptocurrencies were in the bullish mode with Bitcoin spearheading a jump to new all-time highs after President Trump signed the executive order. You've probably heard of this. It's called Strengthening American Leadership in Digital Finance Technologies. This is, of course, strengthening the legal legitimacy of the crypto industry, really causing some significant upside, some really nice momentum. Markets were anticipating something of this nature once he got into office. We saw that from the moment he was elected president, he was president-elect, and now that he's in office, again, signing bills into effect such as these, we're seeing really positive influence on the cryptocurrencies. As we take a look at the stock market outlook, first, the investor sentiment. So in the investor sentiment, forecasting favorable environment for stock investments in 2025, despite this sort of unconventional policy approaches by the Trump administration. So we haven't seen a lot of pressures put on with tariffs by other administrators, trying to really kind of create the checks and balances for the U.S. when it comes to trade, when it comes to leveling out the playing field. So this is unconventional for what the markets have been used to. So it's going to take a time for it to understand what's happening and to see the results of that. Now, on the contrarian indicators, Bank of America highlights that its sell-side indicator, which tracks Wall Street strategists' recommendations, is nearing a sell signal. Historically, such levels suggest caution as future market returns tend to decrease when this indicator is high. So again, this is just one of the indicators that's out there. This one here from Bank of America that's saying it might near a sell signal. We've seen this happen a couple times where the slightest little upset in the markets, you kind of get a little bit of an oversold scenario, but then the markets are really just coming right back. So we're keeping an eye on this, something you want to keep an eye on as well. The markets could be nearing a sell signal. This is where having that well-balanced, well-diversified approach we think is a great idea when it comes to your investing. So keep that in mind as you take a look at the markets as we continue into the new year. From an economic outlook perspective, of course, all eyes are on the Federal Reserves. Mary Daly, president of the San Francisco Federal Reserve, emphasized a cautious approach to interest rate adjustments. Basically, what she's indicating is there's no urgency to cut rates. They're shooting for that Fed target of 2%. From global economic growth, the OECD projects global GDP to be around 3.3% for 2025. This is up from 3.2% in 2024. And inflation in other countries is also expected to ease. Now, this number significantly larger than what we saw from the GDP expectations, but going from 5.4% in 2024 to down to 3.8% in 2025. So in summary, what does all this mean for January and heading into February? The U.S. stock market is showing potential for favorable investment opportunities, but caution is advised due to mixed indicators. The broader economy remains strong, with expectations of continued growth and moderating inflation. The year's just gotten started, obviously, so there's a lot of room to go. We still have 11 more months in front of us. We'll be keeping an eye on things, bringing that information to your attention. But as of right now, we're very optimistic on what we see in both the stock market, the economic market, the world market as a whole. Do expect there to be some turbulence and some fluctuations, of course, especially as like we talked about, as some of these newer policies are being introduced. It's going to take time for the markets to digest those. But we believe, much like some of the other economists and strategists that are out there, we think that 2025 is going to be a favorable year. We don't forecast a virtual straight up year. We do think there's going to be some choppiness along the way, but to be determined. So what we want to leave you with here as we wrap up this video is invest wisely, and we'll see you right here next month, same time, same place. Have a great day.